Hello, 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 hello. What's going on, everybody? Welcome to Our Stock Trades. In this video, we're going to go ahead and talk about SoFi. Now, if you haven't been here before, or if it's been a while since we talked about SoFi, my recommendation is look at the past videos by searching the history. I've always been a SoFi bull, and usually I come out when I see opportunities arising, like when the stock dipped back to $6, right when it basically bounced up to here. So I've been looking at this stock for quite some time, all the way back down when it was around the $4 region. And the testament of time in our YouTube history can basically showcase this. So why am I talking about SoFi now, right? Make sure the audio is working here. Well, the reason is because look at the stock price. It's gone down and it's gone below the 200-day simple moving average. I think we're in a period of consolidation now, given the whole tariff situation, Robinhood, et cetera, et cetera. And we're going to go ahead and go through a series of facts regarding my due diligence and a couple things. But just to answer the title for folks that don't have time, Wall Street is lying about SoFi. Don't let them steal your shares, and I'll show you proof, okay? So if you go ahead and get a Bloomberg terminal, it normally would cost you, it isn't normally, it will cost you $25,000 to $30,000 per year. That's about more than $2,000 per month. Unfortunately, people don't have that type of money. So what we did is we created a stock terminal that allows people to do the same thing, but at a very cheaper price, right? So, very affordable. So we're going to go ahead and put in SoFi, and this is the graph for SoFi. Before we go through all this analysis, I'm going to just go straight to the heart and soul of this. We're going to go to institutional ownership, okay? And we're going to go ahead and take a look at the scoring system. If we go ahead and score SoFi right now, we have a bullish metric of 3 and a bearish metric of 6. However, you can't rely on this right now because, as you can see, the Q1 2025 data, it has yet to be implemented, which affects the average ratios. So what I want to basically do right now is show you how to read this. So this is called the simple moving average, okay? And whenever this blue line is above the simple moving average, which is calculated through a 5-period analysis, it shows that we are bullish, right? An example of this is looking at this per se, right? The simple moving average in the 200-day is the red line. And whenever we went above this, we exploded, right? Because then we start going into stage 1 to stage 2 analysis, right? So what is that? What am I talking about? So if you go ahead and go to stage analysis by Weinstein, I'm going to butcher the spelling here. You go in and you basically see this particular graph, okay? Or this graph is a lot better in my opinion. So you go in, open this up, put this graph here, and you zoom in, and you basically see that whenever we have a 200-day moving average, same thing as a 30-week MA, whenever the stock price or whatever you're trying to measure goes above that, it shows you that there's been a change in trend. So it shows you a little bit of what's happening, right? So right now, that's why a lot of folks are watching this right now, because we just broke below this. Could this be the start of a stage 3 to stage 4 analysis? Well, that's only if you believe there's going to be a recession. I don't think that, right? I think this is all negotiation. And whatever the market gives is a great opportunity, especially for this type of caliber of a stock, in which we're going to go ahead and go into. So now that you understand how to read these graphs, let's go ahead and look at the metrics. This is called investor holdings, okay? So what this does is our stock terminal, our premium Al Stock Trades terminal, what it does is, by law, if institutions have over $100 million, they have to report to the SEC how much of the company they bought. The problem is, if you go to the SEC government website, it looks like crap, right? It's organized in a very facetious, very disorganized manner on purpose to counteract retail investors from seeing the light and seeing what's happening. For us, we take this data and we conglomerate it into an easy-to-read mechanism to allow retail investors to understand what's happening. So if we were to go ahead and analyze SoFi, you can see right now we have about 777. I mean, isn't that lucky number 777? About 777 holders. So more than 700 institutional big money, smart money investors are holding SoFi. And you can see the numbers just keeps going up. More investors are coming into SoFi more than we've ever seen in the history of the stock. All right. So now that we understand this right just shows you the graph change per quarter from quarter. So it shows you were in a net positive increase. We're just going to focus on the left side for now so we don't complicate this analysis, okay? So this graph shows you the number of SEC 13F shares. So this shows you how many shares do the ultimately SoFi institutional investors, the smart money, how much they own. And you can see here that they own about 523 million shares. So if we were to go back, and we have other parts of the terminal, and if we were to just really quickly type in SoFi here, there's approximately about almost a billion shares, about 1,000 millions, right? About a billion shares. So you can see ultimately that institutions hold almost more than 50% of SoFi. And you can see that back in the day, back in, let's say, Q1 of 2023, SoFi, they only held 317 million shares. So what was the price back in Q1 of 2023? Well, the only way to do that is to look at the stock price. So 2023 was right around here, and it was starting right around here. And you could see SoFi was literally right around that $5 region, okay? And that's it. And so it shows you. And then what ended up happening is we got a bullish signal, which showed that out of the past 5 quarters, pretty much a year and pretty much more than a year, we had a change in sentiment where now smart money has increased the amount of shares. They bought more shares. Institutions, smart money, bought more SoFi. And you could see what happened to the stock price. It literally went ahead and ballooned up, right? So you could see how accurate this data is, because you're just tracking smart money, right? Okay, now this is my favorite. Let's look at the total number invested. As of right now, institutional owners have about more than $8 billion invested into SoFi. So about $8 billion are in SoFi now, okay? So if we were to look at the market cap is 11.69 billion, right? You could see in Q2 something special happened. They finally increased. Before, they only had around 2 billion invested, right? Now it's 2.9 billion all the way up to $8 billion. More than $8 billion is invested into SoFi. So you can see how accurate this information is, and how we're waiting right now for Q1 of 2025, which will show us, did they buy the dip or not, right? Now, this is my favorite. This shows you ownership percent, okay? How much of the smart money people own of SoFi. And this is where it'll answer the title, right? Wall Street is lying about SoFi. Don't let them steal your shares. I'll show you proof. So what ended up happening right now, if you look at it, institutional investors own about 49.838%. Essentially, big money, smart money investors own about 50% of the freaking company for SoFi. Where back in Q1, when the stock price was around $5, they only owned 34%, right? And then obviously we got a change in signal. And then now it's above the red line, which shows you that we've entered stage 2 analysis, right? Which is basically a bullish form. Read Weinstein's book there I believe it's Harvey Weinstein, right? His book in regarding how to understand this, right? Oh, sorry. No, so Harvey Weinstein's someone else. I'm sorry. I mixed the name here. His name is Stan Weinstein, right? Secret of for like technical analysis. I recommend reading this book. It's incredible. It was written in the 80s and 90s. It's just simple, stupid, and it helps you figure out what's going on in a bull and bear market. You obviously need to compare it with other metrics, such as fundamental analysis. But you can see that we went above the red line, and now we're in a very bullish territory, right? So the question now is, you can see that as the stock price went down, especially in 2023, like look what happened in 2023. The stock price literally used to be $22. I made a video back in the day saying that it's overvalued based off of the fundamentals, and I got trashed by the community, but overall it did go down. And then as it went down, sadly, retail investors sold. And what ended up happening is smart money started buying the stock from retail investors, which is unfortunate. So what retail investors do, institutional investors do, is they create this momentum where they basically drop down the stock price. And you could go ahead and look up Jim Cramer market manipulation from 2005, and you'll see what I'm talking about. And what you see here, as the stock price goes down, I mean, this thing dropped 47.31%. People lost half of their money. I mean, we're talking big SoFi bulls that probably went up to maybe $5 million, and then their portfolio dropped down to $2.5 million. That really hurts, right? That really hurts, okay? So, unfortunately, if you don't have this type of data, you kind of don't know what's going on and what smart money is doing. Look at the number of new positions increasing, the amount of more people. I mean, look at that. You had 169 new positions coming into SoFi, right? All right, what else? How about people that already had positions, right? About 384 increased their positions in Q4 of 2024. Just imagine what they're doing probably now, right? Right. Let's see. Let's look at the put to call ratio. All right. So the put to call ratio, if it's under one, it's pretty. There's more calls, right? But look at the amount of puts that big money put on SoFi back in 2022, right? So look at Q1 to Q2. They increased the puts on SoFi, which is very bearish. And look what they did. They pretty much destroyed retail investors. Because look what happened. They increased puts and the stock price dropped 70%, right? And unfortunately, retail investors, so they made money on the way down. Then retail investors sold, and then smart money bought. I mean, it's just a continuous cycle, right? If you don't know what you hold, then you'll unfortunately get shaken away by Wall Street. And it's hard to know what you hold because you don't have the data that they have, right? Which is why we created this platform to be able to help folks, okay? So this is the analysis thus far for SoFi. Now let's go ahead and look at the support and resistance line. Again, this is our AI analysis that we have here. So you can see right now we got a $10.54, $10.69, $10.82, $10.93, and $11.15. If we were to go ahead and look at the Fibonacci's, you can see the Fibonacci's to the right. I'm not going to read them off to you. You can go ahead and take a look at them yourself. You can see it bounced right off of that 1043. So that we have now let's look at the hour. We can look at the support and resistance. So we could see we're kind of hovering around the lower portion of that 1050. I mean, this could be, we could have arrived at a bottom, right? Let's look at the daily real quick. That'll give us a lot more information. Let's go ahead and look at the, right? So the next leg down will be $8.15. I don't think that'll happen. I think we're consolidating around that $10.74. And I think this may be the opportunity that people were looking for of getting in, right? You could see it here as well as it dropped down to $9 and what is that? 83 cents. You can see the support line there. Okay, so let's go ahead and off of the daily, let's run a Monte Carlo. So what a Monte Carlo does is it runs over I think this is 5,000 simulations, right? And it shows you the bull case. So it runs 5,000 simulations and it draws a histogram for you. And it shows you that the bull case is $17, the base is $10, and the bear is $6.60, right? And what I like to do actually is I like to run Monte Carlos for all time frames. When we go ahead and do that, we get I think, better analysis, right? So on the minute chart, it's been pretty bearish. It's about $10 for the bull case. For the hour chart, $12.68 for the bull case. On the daily, we got a bull case of $17.36. On the weekly, we got a bull case of $22.92, up 115% from the level right now. And all time is around $18.38. So again, if you try to look at this is 25,000 simulations. If you try to open this up, the system will say, no, you can't do it because, your computer can't handle it, right? This is, again, 25,000 simulations we're running. Again, this is the type of analysis that you're not going to see on YouTube. We're a bit different, but we like to be data-driven on the investing, okay? So based off of what I'm seeing right now in the simulations that we're running, it seems that the average is definitely going to be above $15, right? Based off of what we're seeing here. So what I want to do now is I want to run a advanced technical all section And what we see is a bullish of 3 and a bearish of 2. So on the minute, we have an uptrend. On the hour, we have an uptrend. On the daily, we have a downtrend. Weekly, we have an uptrend. And all time, we have a downtrend, which makes sense because the all time, of course, it's going to be a downtrend given that we haven't really arisen from the past, when it used to be $25, right? But overall, we're still on the bullish side when it comes to the technicals. And you can go ahead and analyze all this information here, right? So there's my spiel in regarding to the technicals. Let's go back up, scroll here, and let's go to the minute chart real quick. All right, so there's that. Now what I want to do is I want to talk fundamentals, okay? So if we go ahead and open up SoFi real quick, you could see a couple of things, right? Let me drink some coffee. All right. So with that in case, let's go ahead and analyze this. By the way, if you do like this video, please give us a subscribe and like, because it obviously helps with the YouTube algorithm to get this information out there, because unfortunately, a lot of retail investors, they don't have the GPS needed to make these types of decisions, right? In terms of data-driven decisions, okay? So based off of this, our AI summary, operating cash flow 2019 turned negative, free cash flow 2019 turned negative, and net income in 2018 turned negative, but in 2024 it turned positive. So if we highlight net income here, you can see that it's been negative, but for the first time ever in 2024, SoFi is positive $498.67 million for the first time in the company's history. Obviously, we have 2017 here, but they weren't publicly traded, right? You could see here that we're up $498 million in net income, which you can see here highlighted elegantly in green here, which is the net income, right? So the other thing I like to watch is free cash flow. Free cash flow was negative $7 billion, and that has to deal with acquisitions and whatnot. And you could see they're drastically reducing their free cash flow, right? So before we go ahead and before we get into this right now, let's go ahead and get to the fact sheet in regarding to SoFi, right? And I'm going to go ahead and read off of this real quick, okay? So SoFi started as a digital lender, but has evolved into a full-service fintech platform. In 2024, SoFi hit $2.61 billion in adjusted net revenue, growing 26% year over year. Fee-based revenue from financial services and technology hit about $1.2 billion, up 54% year over year. Lending still made up $1.45 billion of revenue, fueled by $23.2 billion in originations. SoFi Bank Charter enabled lower funding costs with over $25 billion in deposits. The LPB model let SoFi sell loans to institutions while keeping customer relations. Financial services turned profitable in 2024, led by credit cards and SoFi Invest. 40% of new users added a second product within the first month, boosting LTV. Galileo processed over 1 billion transactions in 2024, launching U.S. core banking. You have the tech in Galileo. I always cannot say this last word here. Build SoFi's future as a fintech infrastructure provider. SoFi, again, this is big. 5 straight profitable quarters ending in 2024 with $499 million of GAAP. This is the real deal of net income. Q4 alone brought in $332 million of GAAP net income and 785,000 new members. SoFi now has over 10.1 million members and 14.7 million products across platforms. 2025 guidance calls for up to $3.28 billion in adjusted revenue and $305 million in net income. So the adjusted EBITDA margins in 2024 was around 26%, expected to rise in 2025. The company is shifting from interest-based income to fee-based capital-like growth, which is really good, which is honestly going to help with free cash flow. SoFi stock trades at 42x forward earnings based off of the old analysis that I've done with higher expectations priced in. The company faces macro risks like recession fears and high personal loan defaults, but I think these recession fears are not as much as what one might think based off of Trump's art of the deal. I think that in the next 6 months, I think what we're going to be scared of, this fearful recession, will soon subside, given that we're just waiting for China really now to make a deal. Despite volatility, SoFi is considered a top fintech with strong cross-sell momentum. Long-term success hinges on the execution, margin expansion, and platform monetization. So again, I just kind of wanted to run with this just to give you a little bit what I was looking at and a little bit of my due diligence, okay? So there's that. I'll take a look at this, guys. I'll take a look at it. Definitely. I need to, it's been a while. So we went ahead and did that. Now, before we even move back to the financial sheet and the fundamentals, again, this is all part of our stock terminal. What I would like to do here is I want to actually go to analyst estimates, right? And these are the analyst estimates for SoFi. And you can see we have all the way to 2027. Good luck trying to find that, right? So you can see that analysts are expecting SoFi to make around $4.4 billion of revenue in the next couple of years, right? In the next 2 years, right? This year, I think analysts, we could go ahead and get the average really. Analysts are expecting around $3.2 billion of revenue. And I believe, doesn't that coincide with the analysis here? About 3.28 billion of adjusted revenue. And here it's saying 3.2. So this is, a little higher, but yeah, so about 3 point whatever billion, which is interesting to see kind of the growth rate here. So we're thinking about, 3200. So let's actually calculate this for a sec. So let's do 2025, and we're doing what was the number here? I have a memory as a fish right now. Let me see. 3218. So let's go ahead and put 3218. And then 2024, we know what they grew because we have their financial sheet, which is this, right? So if we were to calculate this here, we're expecting SoFi to be around a growth rate of 23.18%. Now, it's always nice to conglomerate this and check to see what's going on here. So let's look up SoFi real quick, and we can go to the analysis here. Is this something that, to see if we're in line? So yeah, right around 20%. They're expecting actually 32%. Now, obviously, I think the reason why they're expecting 32% is it has to deal with their guidance, I think, right? I have to double check here. Whoop. So just to be safe, we could go ahead and put 23.18%. And we're going to put this number later on when we calculate the value of SoFi, right? Again, I'm just doing things in little pieces. I promise it'll make sense at the end. So if you look at net income, guys, look at the net income. I mean, holy crap, guys, look at this. Here's the zero side. And we're obviously profitable here. It said about 154 million of net income, which is complete idiotic because if you look at the net income here, we're at 498, right? So they obviously got that wrong. So either they're expecting net income to go down, but ultimately in the long run, you could see the net income here is about $1.2 billion. So they think in 2027, they think that the net income for SoFi is going to be 1.2 billion. I mean, isn't that insane? This is going to be a cash generating machine. Okay. So again, these are the things that, you want to look at, right? So we can look at the quarter to look at kind of quarter over quarter. Again, this is all part of our stock terminal. It's really beautiful how we're able to have this type of data to really help retail investors thrive because, again, retail investors don't have this type of GPS, right? So we went ahead and talked. Now we really went ahead and talked about a lot of this. So now let's go ahead and look at the quarter section for this. Okay, so let's go ahead and just remove free cash flow for a sec and just look at net income. So you can see Q4 of 2023, SoFi is flipped to being net income, right? You see the net income sign here, net income positive. And that is insane. And you can see it here in our AI summary analysis. Net income 2023 Q4 turned positive. Again, if you guys want access to this, there'll be a link down below. Again, this is really sophisticated software, right? So you can see that's why in my due diligence here, I said they had about 5 quarters of net income positivity, right? So we can see it here. It was somewhere here where I said here, SoFi had 5 straight profitable quarters ending in 2024. So what does that even mean, right? Well, here's quarter number 1, here's quarter number 2, here's quarter number 3, here's quarter number 4, and here's quarter number 5, right? So there's your 5 profitable quarters, right? And that's pretty impressive if you ask me. So what I'm looking at right now is Q1 of 2024 was about $88 million of positive net income. What I'm looking forward to is I'm going to be looking for Q1 of 2025 to see, is it going in the right direction, right? So that's ultimately what I'm looking at right now. Now let's go ahead and shift gears and look at free cash flow, because free cash flow is king in my opinion. Obviously, with banks, there's a different way to evaluate them, but we can still get away with evaluating through an intrinsic value calculation from SoFi, which I'm going to show you right now. Let me go ahead and take a little drink of my coffee. So for the first time ever in Q4 of 2023, SoFi turned free cash flow positive. This is on a quarterly basis. You can see it here, right around here in 2023 Q4, right? You can see it's highlighted in green, but then it turned negative, right? But you could see if you compare it through these other negativities here, you could see the level of negatives is actually a lot less. I'm actually bullish for this because just imagine in the next 2 years, it already got net income positivity, right? Which is the one-headed dragon. The next headed dragon is being able to conquer free cash flow positivity. And if it's able to do that, holy crap, guys, holy crap, right? So now that we went ahead and did this, what I'm going to do is I'm going to put this enhanced AI analysis button, right? When we click that, we get this AI analysis section. And you could go ahead and kind of read it and to see kind of, this gives you Z-scores. It gives you different levels of analysis. Just to kind of be very clear here, you could see that, let's see, you could see different forms of revenue in terms of operating income. There was a sign flip, operating margins, sign flip, net income increased by 265.81%, sign flip, earnings per share increased, payout ratios. What are they giving a dividends or something here? Oh, so they started a little divvy here. And it looks like they don't have it anymore. So I'm not too sure where was this. Probably in the original S1 before they became public. Let's see here. Book value went up by 5%. Operating cash flow is better by 84%. Free cash flow became better by 84%. And then and we're going to hit this generate insights right now, but I just want to just quickly pay attention towards this right now. So this is actually really good, guys, right? Okay, so let's go ahead and click generate insights. Well, actually, hold on. Give me a moment. Okay, good. All right, we're good. We're good. All right, let's go ahead and hit generate insights. And now we're synthesizing strategic financial intelligence. This is part of our AI analysis. Let me go ahead and zoom in a little bit. This is part of our AI analysis, guys. And what this does is it takes in all this information and it takes over 10 years of financial data and it goes ahead and generates and gives you insights that is smarter than any financial guru out there, right? So it's going ahead, analyzing the information, and it's basically thinking about it. And once it's done, it's going to go ahead and give it to us. We're going to go ahead and do this a couple of times to get us an understanding of what's happening financially and fundamentally in regards to SoFi. This is, again, we're all data driven here. There's no emotions. Everything has to deal with numbers, right? It's all, it's all a numbers game at the end of the day. So just let's go ahead and figure this out. Oh, and then if you guys want to learn kind of what this is, what's revenue, you can see here what revenue is, right? It's pretty cool. It's an educational platform as well. I'm just waiting right now for it to synthesize the financial intelligence. So as it does that, I'm going to do a couple of things right now. Still waiting. It's taking a lot of information. Surprised it's taking a while. Let's see. Let's see here. Probably best to do something else while, but I'm working on something else on the side right now. Let me see. Let's look up. All right, there it is. So it's generating the insights right now. So let that generate. Let me go ahead and zoom in a little bit more. All right, so let's see. Let's figure it out. So revenue growth is strong but slowing. Okay. Which we knew that, right? The level of growth is slowing down. Revenue grew consistently. Negative. Okay, growth slowed. Okay, there it is. Implications: market saturation or competitive pressures may be emerging. Investors should monitor. Yeah, in terms of like Robinhood and whatnot. Operating income turned positive. Net income flipped. Negative prior. Again, you guys can pause the video and read it in full. I recommend you do you do so. Free cash flow was deeply negative for years. Free cash flow improved in 2024, but remained erratic, which is good. Not good, but you could see, it's good that it's able to pick that up. Operating cash flow still negative, so we're still monitoring that. High cash burn risks liquidity, but it is profitable. Where's this at? Book value per share grew to $6.21. So that's actually really important. Look at book value here. You can see book value is $6.21, right? Because once SoFi fell to $5.88, it was falling at book value prices, which is insane. So it's generating recommendations now. So let it generate now. But let's just go ahead and read the conclusion here. SoFi shows promise with its 2024 profitability, but cash flow and execution risks remain. Investors should weigh growth potential against financial stability. A wait and see approach may be prudent until free cash flow turns positive, right? So I think, though, by the time free cash flow turns positive, I think the stock is going to be, a lot higher than what it is now, right? Especially how much it's, obviously it's a high beta stock, right? Which means that it's pretty, erratic. Long-term perspective and risks. The upside is scalability in fintech services, profitability trajectory, 2024 turnaround. The risks is, the cash burn, the free cash flow, share dilution, and dividend instability. Obviously, we don't care about dividends here. We care about more of the growth. These are recommendations to kind of look for: monitor revenue trends, evaluate profitability, assess the cash flow, which we talked about. Watch for dilution impacts, which I don't think they're going to be in a problem with that. Consider valuation risks, diversify, wait and see approach, right? And so there's that, right? And there's a couple changes, though. There's a couple changes that I want to do with this financial data and analytics metrics chart in regards to something that I figured out in regards to 2025. There's a bit of a little thing I want to fix. Let me look at the comments. Oh, holy moly, 3D Machines. I appreciate the $10 donation for tomorrow morning's coffee. Hey, I appreciate you, 3D Machines. You're the best. Thank you so much. For folks that don't know, 3D Machines is a YouTuber on the platform. So he's been a very amazing supporter of our mission to democratize financial literacy. So I appreciate you, brother. Thank you so much for your support. 100%. Appreciate you. Right? Okay. So my apologies for it being quiet. Was working on the financial strategic analysis here. So now that we went ahead and did this, now let's go ahead and take a look at this. Now this is SoFi, and these are their earnings, right? So obviously there's no earnings for Q1 yet, right? No transcripts available. But if you look for Q4, here's the transcripts available for Q4. And if you click on it, it starts reading it for you. But the beautiful part is is we could go ahead and do a couple of analysis here. We'll go ahead and generate insights. And what it does is it's synthesizing strategic transcript intelligence for the past quarter. So what we're doing now is we're taking the transcripts from Q4 of SoFi from Anthony Noto's company, and we are going to be generating insights. And then once we're done, we're going to hit the generate insights for the past 3 years, and it'll take essentially 3 years of SoFi information, and it'll give us an analysis of what it thinks in regards to SoFi. Really cool stuff, really cool things that we were able to create here, right? So we'll go ahead and figure this out. Just give it a moment. One moment here. Let's go ahead and wait. There it is. So it's generating the insights from the earnings. So it conglomerates all this information, and it's able to kind of give you what's going on. And I think this is a very powerful way to look at what's important, because there's a lot of garbage up there, and it looks at analyst questions and analyzes everything, right? And it's able to give you something that unfortunately people, don't have, right? SMB lending, all these different types of things, right? And, it gives you projections for 2025 and all these different types. And I really like this. I really do. So let's go ahead and have it just kind of finish off. So there it is. Final rating, strong buy for investors with a 2 to 3 year horizon. I mean, that's pretty much it. We can go ahead and we can end the call here, guys, right? So SoFi's diversified model, profitability inflection, capital-light growth position it as a leader in digital financial services. Near-term risks, which is credit card losses, macro volatility, are outweighed by long-term opportunities in subscriptions, LPB, and invest. The company is on track to exceed its 2026 targets with high margin fee revenue and return on equity expansion as a key catalyst. And the cool part here, guys, is look at the 2025 projections. Revenue is 3.20 to 3.275 billion, which is a 23 to 26% growth, which we went ahead and calculated here, and a humbly 23.818%. So it goes ahead and pretty much did it for us. The halfway point. Adjusted EBITDA is 845 to 865 million, incremental margin of around 30%. EPS is 25 to 27 pennies, excluding 2024 one-time gain. Median term target for the revenue exceeds 20 to 25% through 2026. EPS is 55 to 80 by 80 cents by 2026. You got the expansion and all these different types of strategic investments. Now we can go ahead and look at the overall analysis when it comes to generate insights for the past 3 years for SoFi, and it conglomerates and shows you the story of the execution from zero to hero for SoFi. With the respect of time, we're not going to go ahead and do that. For folks that are interested in wanting to do these types of analysis on their own with other companies that they're invested in, our platform is open for retail investors. So now that we have this, let's go ahead and do a couple of things to figure out kind of the intrinsic value here. So since the revenue, we could see it here. The revenue expectation we said was around 3.2 billion, right? So if we go ahead and just we could just do this here, this calculator. If we type in 3200, multiply that by 5%, which is I think a humble 160, right? 160. So let me just go ahead and whoopsies. Let's go ahead and just kind of redo that. 3200 times 0.05, 160. Okay. So we'll put 160, and then we'll grow this at the growth rate that we already calculated here, which is 23.18. Okay. And we'll go ahead and calculate the price target for SoFi. So if we calculate the price target for SoFi based off a 23.18% growth rate, you could see that the bull case is $8.63, base case is $6, and bear case is $4.45. Now you may be looking at it and saying, wait a minute, that's below what the current stock price is, right? So that's because we went ahead and did a 5% of the revenue, right? Which is a very bare bones, how do I say this? Minimal revenue to free cash flow transition. Now, the reason why I don't think that's going to happen is if you look at the gross margins for SoFi, they're pretty up there, right? The gross margins are insanely up there, right? So let's go ahead and let's figure out by looking at the quarter real quick. And let's look at the time where last time it was free cash flow positive. So here's SoFi, and it was 178 on 603. So let's calculate that. 178.88 divided by 603. I'm showing you how I do my analysis in real time. 603.31. So this is insane. About 29% of the revenue turned into free cash flow back in Q4 of 2023. Now, again, is that sustainable? I'm not too sure. But let's go ahead and let's apply this analysis towards our intrinsic value. So let's go ahead and do this, and let's type in 3200 times 0.29. So that's about $927 million of free cash flow. Now, if you think that's a lot, before I even hit enter, let's go back. If you think that's a lot, let me remind you. Let's go to analyst estimates, and let's go to net income. If we go to net income, in 2027, they're expecting SoFi's net income to be $1.2 billion. They're expecting SoFi's net income to be over $1 billion, guys. Okay. So what do you think the free cash flow is going to be? Right. So based off of this, of the numbers that it gave us from Q4 of 2023, we can expect around $927 million of free cash flow. At a 23% growth rate, if we go ahead and do the calculation now, we could see the bull case is $50 and the base case is $34.74, and the bear case is $25, right? But here's the thing. We could be humble, and we can go ahead and we could say, well, you know what, 30% or 29% of the revenue to free cash flow is pretty bullish. Let's half this. Okay, that's fine. If we half this, we could say 15%. If we half that, that's about 462. We update projections. We have a bull case of $24, a base case of 17, and a bear case of 12. But regardless, we're still undervalued, in my opinion, right? Again, this is an educational platform. But the point is I do think that this stock is worth anywhere between $17 to $50. And all that SoFi needs to do is it essentially needs to execute on what it's been saying. And it has been. They've been positive on the quarterly basis for profitability of net income on the GAAP basis for 5 consecutive quarters. They've increased their percentage of getting close to being free cash flow positive. They're still free cash flow negative. But overall, looking at all this data, it's very simple to say that it's heading in the right direction. And whenever I see a dip like this, I see this as an opportunity, right? And unfortunately, every time you see dips like this, retail investors unfortunately sell, which goes back to the first thing I showed you in this video when we look at institutional ownership, more specifically on the ownership percent. Unfortunately, what's going to end up happening is as the stock price has dropped, retail investors sold, in which now SoFi, big money institutional investors, own about 49.83% of the company. Just wait until we hear back that they bought more. How are they going to own more of the percent of the company? Because, and sadly, retail investors sold their shares. Now, one more thing I want to talk about. It's something that I did not mention. There's something called the wheel strategy. Okay. And the beautiful part about SoFi is it's one of those heavy hitters that pays really well on the option side. Now, of course, covered calls limit your upside, but once a stock gets to its intrinsic value, do you really think retail investors know kind of when that hits? I'm going to give you an example. Let's say someone has around 200,000 shares of SoFi. Now, if you think that's gargantuan, Wait till you see the amount of shares that people in our stock terminal hold, right? And yes, we are flexing, right? So based off of this, and you can go ahead and quantify it to your own portfolio size, right? But let's give you an example off of what SoFi is paying right now, okay? So if we were to go ahead and trade options and just for this week, which is, April 17, which is tomorrow, because it is a short week for the markets. If you want to go ahead and if you think that SoFi is worth $11 and that's the intrinsic value, or let's say the intrinsic value is truly $8 and you think that SoFi is overvalued, which I don't think is the case. If you were to go ahead and do the wheel strategy, and let's say you have 2,000 contracts, in just one day, you're able to make $14,000. Now, of course, this is skewed because it's a short week. So if we were to go ahead and do the options for next week at $2,000, at 2,000 contracts, that's $58,000 of options premium that you'll be able to get. Now, personally, if you ask me, I think that you'll be able to get a little bit higher as the stock price goes up because the amount of money you work with goes up. And we already, based off of, the past 46 minutes of me talking about SoFi, you could see how undervalued it is, right? So kind of what I'm mentioning here is, if you have around 200,000 shares of SoFi, let's say at the current price of $10.80, you have about $2.1 million, right? If you go ahead and do a covered call for $11, you'll make around $58,000 in 1 week, right? So if you go ahead and do that, let me make sure I get this right.
50,000. 2,160,000.
That's about so if you multiply that by 100%, that's about 2.68%. Multiply that by 4, you're making around 10.74% per month. So let me go ahead and give this to you. So you're making $58,000 per week. Okay. 58,000, multiply that by 4. That's about $232,000. Now, personally, I think 10.74 is a little bit high for SoFi. I think you can get away with 6-7% per month. But to be humble, let's go ahead and do 3.33%. Now, I personally think that, again, if we go ahead and do 3.33%, that's around $71,000 per month. So essentially, you have income now at over $800,000, right? Now, here's the thing. I personally think SoFi is going to be anywhere between $17 to $50. Let's say it gets to 25 to 30. Let's call it 30. If we go ahead and if we take 30 multiplied by 200,000 shares, we're at $6 million. Okay. Multiply by 3.33%, right? You're making $200,000 per month. Now, of course, if you take SoFi's, 10% that, 10% what you'll be making this month, if you did a weekly options, you're going to be getting $600,000 per week. Now, I don't think that's going to be the case. I think the option's a little hot right now, given that we're close to earnings. I think a good number is 3%, 3.33% of 200,000. Imagine this, right? Making $200,000 per month, which is equivalent to $2.3 million per year. I know this may sound like some craziness, but there's a really good YouTuber. His name is TJ The Wheel Deal. My videos are erratic in terms of no scheduled time. It's like whenever I have time, and sometimes it's like 9. It's 9 p.m. right now, and because I have a medical career, I'm balancing as well. But my plan is to bring him on the channel, right? For him to showcase this, because he has more experience than I do in terms of the wheel strategy. He's a lot older than me, right? So he has a lot more experience, right? But based off of this, guys, I mean, imagine making $200,000 per month, right? Is that I know that's insane, right? But that's exactly where we're headed, right? And it all goes back to what you want out of life, right? Look at the amount of due diligence that I just did right now in front of you, right? That's just me trying to explain it to you. Imagine what I had to do just because of me trying to put this together, right? It takes time. It takes time. Okay. Hey, TJ. There he is. Good evening. Just happened to be tuning in and I'm hearing you talking about the wheel. Love it. I appreciate you. Okay, yeah. So my man, TJ, I'm really sorry. I've been coming home recently really late. I've been working in the hospital and it's just my schedule has been really bad. And so my videos, I mean, yesterday I made a video at like 11 p.m. Arizona time, which is like 1 or 2 a.m. Eastern. So it's been pretty erratic. But understand that every week I'm like, damn, I got to bring TJ on. So my apologies on that, but I promise it is going to happen. Right. But yeah, so TJ is, I recommend looking at his channel up on YouTube. Definitely a really nice man. He knows the wheel strategy. He lives off of the wheel strategy, and that's his area of expertise. So definitely. And also, by the way, TJ, I was thinking once I have an MD after my name, I think what do you think? I think potentially it may be of interest if we come together and we publish a book together, utilizing both your methodologies and my methodologies in regards to, using these figures and figuring out kind of what big money's doing, the numbers involved with SoFi, earnings report analysis, and intrinsic value, and along with your wheel strategy, along with the metrics that you look at. I think that would be very helpful, right? I think that would be, wouldn't that be super cool? And I think the reason why I say when I have the MD after my name, I think that right there will help elevate its authority, given that that's what they teach us in medical school. The MD helps elevate it, even though that we don't really need any more elevation based off of our portfolio. But again, anything helps. And I think that we're going to do a lot of good in regards to being able to showcase, how to do this. And again, our videos, are not, again, I don't care about video editing and that. It's raw information. People take it how it is, and let the data and our results speak for themselves, right? Yeah, that's the word. It adds validation, right? Even though MDs don't know crap about business, right? In fact, I think personally putting an MD behind it decreases the validation, but that's not how society works. But I digress. But TJ, I don't know if you've been following, but dude, look at Clover, man. Clover's up 495%, right, on the year. It's up year to date. I think this thing is just about to explode, right? I'm very excited. Speaking of just, very quickly for CLOV for a sec, just look at the free cash flow. If we're talking free cash flow, SoFi for the first time it became net income positive. Clover's reversed. This is the first time, it's become free cash flow positive, and this was in 2024. So we're early into this. And once it becomes net income positive, it's going to get the trifecta, and we're going to get to a whole different level. Now, one thing I want to fix is if you go ahead and type in NVIDIA, it shows 2025. Now, I got to figure out kind of what's going on there. There's a couple of things I need to fix on the financial data and analytics metrics chart. Just a couple few things that need to be fixed. But overall, this is a very, very powerful platform that allows you to take literally many years of data and conglomerate them into a very good thesis, right? So yes, the Clover's been a great performer, absolutely, and the options chain is amazing with Clover. I mean, it's just only at $3, and I think it's doing really well. I've actually played around with the options myself. I've held on covered calls until Q1, right? I'm expecting some bullish announcements this year, and I think 2026 they may be profitable on a gap adjusted basis. So yeah, guys. So I mean, that's pretty much it. Let me just double check here to see if I don't have anything else. Yeah. So I think SoFi anywhere between $17 to $50. I would say I would be comfortable aggressively doing the wheel strategy at anywhere between $17 to $25. and then just milking the shit out of it. But everyone has their own risk, risk tolerance. But that's all I have for you guys. If you like this video, don't forget to subscribe, like, comment, share, all those things. Again, I try to keep things data driven. I try to keep emotions out. Everything's supported by numbers and facts. And we just try to do our best, right? And if I obviously make a mistake, comment down below if I made a mistake. Again, I'm only human. This is alive. There's no script in front of me. It's just me and the computer and the microphone in front of me, guys. Okay. So love you all. And thank you, 3D Machines, for the $10. I appreciate you, boss. You don't have to. I do this analysis for the love of my heart, guys. I appreciate you guys, and that's all I have to say, guys. God bless you all. And TJ, we will have our day. We will have our day. It's going to be epic, okay? And we will have a time where we'll be able to sit down and really craft something very strong, as a textbook to really help people, right? And I think it's going to be very effective, right? That's all I have for you guys. God bless you all, and I will see you on the next one.